It's an exciting time in that we now have a house of brands versus a branded house. A house of brands versus a branded house to maximize our portfolio opportunity. We will focus on creating consumer demand, not just consuming supply. And we will deliver a total value proposition to consumers beyond just price and product, while maintaining our competitive advantage as the best and largest American-owned producer of chicken, beef, and pork. Tyson Foods has been around for 80 years, long enough to know that success comes from being focused on the future, not on the past.
So when you look at the depth and the breadth of our portfolio, and combine that then with the strength of our brands, that really sets us apart. Because we can deliver what the consumer wants at every meal occasion, wherever they are. So really, we create value by intersecting with the consumer in all day parts, wherever they are, whether they're eating at home or away from home. And when we intersect with them with meaningful benefits. Those meaningful benefits create value for them, and that creates higher, sustainable profitability for us.
Everyone is talking about big data, but at Tyson, we're focused on smart data. This is our partnership of our syndicated data house and our media agency to allow us to code each household with purchase propensity data to target consumers cross-channel. Now, taking this approach ensures that we're reducing wasted impressions and improving our efficiencies. And it also leverages the expertise of our partners versus bringing the expense and the resources of managing big data in-house. And all that translates into profit. Our return on each MAP dollar we spent last year increased 17%.
Free cash flow that we expect to see more than $1 billion, coupled with more than $500 million in proceeds from the sale of our Latin American assets. You can see that we have the ability to rapidly pay down debt. That also means that we can improve our leverage ratio substantially. And so we're going to take that ratio down to 2 times by the end of fiscal 15, that being net debt to EBITDA. We also increased 2 of our normalized ranges in our segments. The first is in chicken. We took it from 5 to 7%, and we moved it to 7 to 9%.
We have a branded portfolio that's highly positioned to grow, and we have a proven track record of growth. Now, this requires a very strong commitment to growth, and I'm here to tell you we have that, and we have that stronger than we've ever had before.
If we have best-in-class operations, which results in lower cost, as well as we have best-in-class brand building capability plus innovation, which should give us the high revenue. So low cost, high revenue is the name of the game here.
Our outlook for 2015 is that we will return with something greater than 10% return on sales. We have very good visibility at this point as to what our input costs are going to be, as to what the pricing environment looks like as we look into 2015, as well as some of the benefits that we're going to capture from some of the investments that we've made from a capital standpoint the last couple of years. So I feel very, very comfortable about 2015. As we look into 2016, I can say with nearly the same confidence level that it looks to be a continuation of something very similar to 2015.
Well, Donnie, when I think about supply chain in Tyson 2.0, I'm thinking about a margin-based supply chain providing end-to-end visibility to make great margin decisions.
We have always been an organization that has been very focused on continuous improvement, being the low-cost producer. We may not have been the first to innovate a lot of the stuff that we do, but we've always been the best in executing whatever it is that needs to be done.
It's a new calling. It's a mission to eliminate waste, execute lean manufacturing, continuous improvement, And the excitement on my team is about what we're going to do with the dollars that we free up, reinvesting in these #1 branded portfolio, investing in innovation. And so my team's very excited to do what Andy called fuel the growth. And so it's not just being great operators, it's being great operators with a mission.
So the way that we're going to drive a different result going forward is by making sure we are driving demand. I mean, that is our job. Demand is a couple of buckets. Satisfying the demand that's already out there. Certainly we talked about that as it relates to poultry, some of the challenges we've had. Getting back on that track once we have supply available is key. The second thing is driving new demand, creating demand with innovation. Sally's team does not just focus on retail. You heard her talk about taking some of the food service products in the retail. Our innovation and insights will be leveraged against food service in a big way.
We think the Tyson Foods corporate affairs practice is a competitive advantage for us. We have functions and experience that I think surpass the competition, and that's a unique advantage for us in the marketplace. You should know that we have a best-in-class corporate affairs team to support a built-for-growth organization. We have a very smart, competent, diverse, and passionate team of people working every day, 24/7, to defend the company's reputation. We have an unflinching commitment to listening to our customers and consumers. So we don't make up this stuff. We do this stuff to respond to needs out there, whether it's in the policy community, the communities in which we live and work, our customers, consumers, etc.
Let's stay in constant communication, because we want you to follow along in the story, and we look forward to great days ahead. Okay? Thank y'all. Thank you.